Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new construction for investors in the Oklahoma City and the Tulsa market. This is the day that the tariffs are put into place. And so everybody's wondering how this is going to affect the market. What is going to happen with mortgage rates? Because as we all know, it's a regressive tax. It is something that can raise the inflation level, which means what is the Fed going to do at its September meeting, where we expected something to happen in terms of a reduction in the Fed funds rate. But probably the biggest news was the jobs report that came out and the revision of the jobs report. First of all, it came in incredibly light. And then the revision was even more dramatic of the last few months, about 256,000 less than what was originally reported. And then, of course, Trump fires the head of that board because he didn't like the numbers. But the numbers are the numbers. This is data. And we can see why this is supported. We can see what artificial intelligence is doing to a lot of jobs. It's automating a lot of things where employees aren't necessary. The public sector has been under fire ever since this new administration came in. We've seen people reduced dramatically in the public sector. And then finally, a lot of corporations are doing this dance where they can go ahead and eliminate a lot of jobs. Maybe they were too heavy on the jobs, but it raises their bottom line, helps their stock, helps their stockholders. It's who they're trying to please. And so these numbers look good. And so the thing that's happening, though, is that the 10-year Treasury, which is the benchmark, is actually going down. It went down from about 4.5% down to about 4.2%. It's gone up just a little bit. But what it's done is it's taken the interest rates down about 1/4 point. And that's the direction we want to see. In other words, when it comes to mortgage rates, sometimes a little bad news is okay. You know, maybe there's a greater chance of a recession or just maybe a slowdown, because what the Fed has been doing a marvelous job of is kind of pointing to a soft landing. We're supposed to have a recession every 7 years. It's been over 15 years at this point. We know that we're due. The Fed is handling the money supply. That is extremely important. It looks to most people at this point that the Fed is going to do a basis point cut at the September meeting, and that there's still a chance for another cut before the end of the year, because this is what they're looking for. They're looking for the unemployment rate that ticked up. They're looking for jobs that is less than expected. And so this allows the Fed to do what they need to do, which is increase the money supply, get people spending again, which is what we do. We are a consumer economy. So bad news is good news. We like the rates right now. They've dropped for investors below 6% for the first time in a long time. We're hoping that we can see a little bit more improvement there. And we're looking for the September meeting for the Fed to see exactly what they're going to do. But this bad news is good news. I'm real bullish on the fact, and what I'm seeing and what I'm reading, a 25-point basis cut coming in September.